For you this evening. Chennai-based VC firm BoldCap has announced its second early-stage fund valued at $25 million. The company, with a portfolio that includes SpendFlow, Test Sigma and Sportdraft, among others, says it plans to invest in 15 to 20 emerging startups over the next 24 to 36 months. CNBC-TV18's Jude Sanath caught up with Sathya Nellore Sampat, the founder and general partner at BoldCap, to get the lowdown on what kind of startups are on the fund's radar. Here's a slice of that conversation.
The second fund is 25 million. We will typically invest in 15 to 20 companies. And we are looking to invest in companies, which is B2B software companies being built from India for the world.
The theme like this year when it comes to making investments, and what kind of average ticket size are we looking per investment?
Sure. I'll take the second question first. So we typically would invest anywhere from $250,000 to $1 million. We will typically invest in a pre-seed or a seed round. So we will typically be the first institutional investor in a company, or either lead it or co-lead it with another investor. And also the sectors that we would invest, or the themes within B2B software, would be largely four that we would say. One will be developer software, other is vertical software, the other is horizontal software but powered by generative AI, and then cybersecurity.
But given the macroeconomic situation around us, there's so much talk about layoffs, about job losses. There is, of course, a big future, a big question mark that lies in the future of startups as well, given the situation that we find ourselves in. Will these weigh in on your investment decisions, and how will they change the way you go about making these investments, Sathya?
Sure. Jude, I think venture and startups is a decade-long journey, right? We have to take a long-term approach when we look to invest. And when we invest in B2B software, if you just look at the overall market, right, it's a $3 trillion spend in the overall markets globally. And SaaS itself is at about probably $500 million and we expect that to grow to $1 billion by 2030. So that space is going to continue to grow. And we believe that, in the long term, all of IT spend, which is one-time software buy, is going to move to SaaS buying. So we do see that this market is very, very large. Businesses need software to grow and scale and be more efficient. And they are going to spend money to buy these tools.
What kind of startups, in terms of culture, in terms of the overall makeup of the company, are you keen on investing this time around? Is the theme going to be leaner, meaner, fitter companies? I mean, that's the theme given the situation that we find ourselves in. So what exactly are you looking at when you go about saying, okay, here's my money?
Right. So I think, one thing that we over-index typically is go-to-market, right? Because these companies are building from India for the world. So we look for entrepreneurs to be able to crack that piece early on. And we would support them in that journey as well. So we are building out a portfolio team which can help founders to solve for that early on as well. The one other thing that we will look at is deep domain knowledge. So see, I think the most critical part in the failure rates when you look at startups, most of the, the biggest reason that a startup would fail is because the software is not needed. So the way to solve for that is to be able to find founders who have deep domain knowledge and are building products that are must-have than good to have.
When does the round close going forward? What kind of timeline are you looking at?
So from a fund close perspective, we will totally close in Q3 of this year.
Okay.
We would invest this capital over 24 to 36 months in about 15 to 20 companies.
All right. What kind of AI and generative models are you looking at as being a key feature of a company that you will, of course, be imperatively investing in?
I think, Jude, you kind of put it well, right? I think even with our focus, we try to invest in horizontal application software, but powered with a generative AI model. We are not saying that we will invest in generative AI companies.
Right.
The two differences are, we believe that most of the applications today, take a Salesforce, take a Freshworks, take most of these companies which were horizontal software companies are going to be challenged by new entrants that are going to come into the market, but they could be a 10x poorer product, but can suddenly become 10x better with just a generative AI model.
Right.
So we're looking at what are the accelerants that companies can create with the generative AI model and can, quickly scale into the market. So that's kind of the theme that we are looking at.
All right, moving